Okay, ladies and gentlemen, welcome. I was thinking because I did this video on automated strategies last time, I should maybe also do a short one on this kind of strategy here, which I've developed, and explain the difference. Yeah. So remember, last time I showed you a strategy where each trade is secured with a stop, and part of the strategy is also the auto lot function. So the strategy will determine, depending on the stop, how many lots to place per trade, etc. And it was also more of a long-term strategy. You won't get a trade necessarily every day. Now today I show you something a bit more aggressive, but I really want to explain to you also the truth regarding those kind of approaches, because you know, all over the internet you see those kind of nice curves, and let me explain you from a professional perspective what all this here implies. So this particular bot I've developed is a bot which makes use of several components regarding grids, hedging, baskets, etc. Right? Now, first thing I would like to stress, yes, it's a fantastic curve over 5 years. Yeah, these are like 656 trades. However, remember that one thing, when you do those kind of empty for back tests, even if you use tick data and etc., remember that it doesn't really show you the open drawdowns that have existed of trades and baskets. Now that's very important for a strategy like this, because most of the time when you see this nice curve where each basket, each trade was closed, and that's exactly what you see here, but before those trades and baskets were closed and they were still open, often they have an open drawdown, and this open drawdown can be proportionally high to the overall performance curve, and this strategy here definitely is no exception. So understand that while this looks like a perfect curve, it doesn't mean that the account went up smoothly every day. That's not the case. Okay, in fact, on many days there were open trades which were in loss and open trade baskets which were in open drawdown, right? And the drawdown proportionally high compared to the overperformance. Understand that. Now, I do not promote grid systems or hedging systems in general, because what you need to do if you want to have some kind of safety regarding black swan risk, you need to have emergency measures in there. Now this particular strategy does have emergency measures, namely an emergency stop for the overall basket. That means when a certain value is hit, the basket overall will be closed in a loss. Now this has not happened during the last 5 years, as you can see. Now does this mean that this is still valid for the next 5 years? Of course not. You need one single observation, one single basket which actually hits the emergency stop, and you're going to have a big kink in the curve. So just because it didn't happen so far, it doesn't mean that it stays that way. Be aware of that. That's number one. Okay, so a strategy like this, it can work, but it's not black swan proof. Okay, if there is a black swan event, or even if it's not a black swan event, let's say it's just an outlier move, okay, and you are actually in that move with trades or a basket, it could lead to a complete emergency stop out, right? Now, it would be completely reckless to not have something in place, like many people do, and that's what unethical EA sellers do. They show you those kind of curves, okay? They sell you all kinds of boards and systems, you buy them, and you think you can just replicate this performance, and they do not tell you, and let me tell you, this includes popular people, okay, who are really popular in that area, trying to sell bots. They don't tell you that a single observation can mess up the complete account, because often those grid systems don't even have any emergency measures, including there are no emergency stops, there are no equity stop rules, etc. So they give you a curve, you can get a demo version of the bot and test it on your own data, and you see the nice curve and you think, well, what do I have to fear? It looks good, I go for it. But you're not aware that you're apart from the fact you don't understand the strategy, which is a huge minus, you are not aware that you've full black swan risk, and you are basically messing with fire and messing with a ticking time bomb. So I'm not saying that those kind of strategies are invalid. Okay, depending on your risk appetite, you may want to go for them. However, you have to be aware that something like this always implies downside scenarios, which sometimes you can't even see in long-term backtests. So good idea is to download, let's say, another 10, 15, 20 years of data and again run the strategy and look for scenarios. Now, if you find incidences where the emergency measures were triggered and there is a big correction of the performance curve, that doesn't mean that the strategy is bad. It can still be feasible for you, yes? And if you are willing to take this kind of risk, you know, you may want to, you know, move in that way and you know, work on those kind of strategies and employ them eventually live, if you're happy to take the implied risk, including the black swan risk. But as I said before, be aware, don't even think about trading such a complex grid strategy live without having emergency measures in place. Now, on the most primitive level, people may say, well, I divide the capital and, you know, I put maybe different pairs of different accounts. If one gets blown, one gets blown. Okay, there are different ways of managing it. Now, obviously, a strategy like this is highly complex. Okay, this is not a strategy you can create in a few hours. It will take a few years. So to create a curve like this will really require you to work on it for a few years. Anyway, so let's see, let's look at the numbers. Right, so 656 trades, profit rates 60.52%. So that shows you that, of course, the trade baskets imply losing trades. Yeah. Now, the average profit per trade and the average loss per trade are nicely balanced. In fact, the average profit rate is actually higher, and the largest profit trade is actually higher. It's the largest loss trade. Now, that's beautiful. So that's why you can see the drawdown. Yeah, like here, 14K against 39K profit. That's a beautiful relationship. Expected payoff 59.63, very good. Profit factor 1.55. So these are the values such a complex strategy can produce. Excuse me. However, if during that time period there would have been a trigger of the emergency stop measure, in that case here, like an overall emergency basket rule, what would happen is, it's not that the win-loss ratio would get significantly affected. However, the largest loss trade would be significantly higher than the values you see here. That's one. And as a result of this, the drawdown, of course, would be significantly higher. Obviously. So, to summarize all of that, firstly, be always skeptical whenever you create a strategy like this, or if you even want to buy a strategy like this. I don't sell those, sorry, so I encourage people to build their own. That's the best way anyways, even though it takes longer. But be skeptical, because as you can see, it's 99% modeling quality, it's tick data, it's with everything included, variable spread, slippage, etc., etc. So be aware that those good results, which are representative, don't get me wrong, they don't mean that this is a safe strategy and that it cannot lead to substantial losses. It's rather the opposite. If you see a smooth curve like this, in most cases there is the black risk somewhere. So you need to identify what's a black swan risk, in which scenarios does the strategy crash, and if it crashes, how much do I lose? Okay, the best traders are obsessed with losses, with losing, with their exposure. How much can I lose? That's what a professional trader asks. How much can I win? That's what a novice asks. Okay, so that's number one. Number two is, if you want to create a strategy which uses complex money management rules, yeah, which has changing trades and lots and hedging aspects with different directions, etc., you need to exactly understand how that works. I'm not showing that here, that would take too long, and also, I don't have an interest in showing all the details here. So you need to really understand all those things. The devil is in the detail, as I say, yeah? Because that determines what the exposure is, all right? All this here is just an output. The output as such is of no value for you if you don't understand the inner workings of the machine. The same like with the market causality. Okay, if you only see my trade calls, which I publish for free, and I've reached very good hit rate there on the forum SMEFX, it doesn't tell you much, like you still need to understand all the other things, yeah, like position sizing, and on the manual side, scaling in, scaling out, and all these kind of things, all right? So that's another thing. People trying to sell you signals or trade calls and so on. That's why I do them for free, because even though if I have a 100% hit rate, it doesn't help you in any way. You still need to figure out, okay, what's my risk per trade? How do I reduce? How do I increase? How do I trail? How do I maybe even hedge, etc.? This is all another page. That's why I'm doing these things. And I don't encourage everyone to just blindly copy trades. It doesn't make sense. That's not how it works, guys and ladies. This is not how it works in general. You can't just copy someone without understanding how it works. Doesn't make any sense, right? That's why I'm offering the market causality, so you can study and learn and even maybe create your own style, as I've said, or create your own bot and so on. Okay, please don't ask me to whether I sell or send you any strategies. I will always give a hint and show what can be done, and try to be of help that way. And especially like here, where everything is for free, I'm showing you, look, it's possible. Yes, you can do it, but I also express those warnings. Okay, and then the next point, to summarize, as I have said before, remember there were open drawdowns during this time. Okay, quite a few of those baskets were in open drawdown. The open drawdown was proportionally high. Right? And that's another weakness of those kind of MT4 backtests. Even if you use tech data and you have 99% monitoring quality, it does not really show you retrospectively. In this case, when you use complex strategies, which have complex trades and complex orders, they don't really show you in a realistic way how big those open drawdowns were. Right? So that's a little limitation. I love MT4, don't get me wrong. Okay, I like it much more than MT5 as well, like many people do. I hope that MT4 will always be there. And especially when you have software which allows you to do those kind of backtests which are realistic. I love it, to do testing. It's fun, it improves everything, even for your manual trading. I've explained it before. Okay, but just be aware of this little limitation here, okay? Even if you use different data sets, okay, you use data from different brokers and liquidity providers, and you run the same strategy over this data, or you change little factors, you change commission, you change different aspects, still you need to be aware that with such a complex strategy, you're pushing a bit what the software can do, obviously. Yeah. And in that particular case, if you use hedges and grid trades and basket trades, it will not show you after the test the actual open drawdowns. So that means, for example, also when you're, let's say, an investor and you're looking for traders and so on, they may show you those curves, but ask those questions. Okay, wait a second, what were the open drawdowns? Because what you don't want to do is you don't want to launch a strategy like this and then suddenly you have an open basket and loss and you're like, hey, what's this? You showed me this smooth curve. And then in the worst case, there's a stop out of the basket, and so whatever you do, whether you're a trader, whether you deal with traders and so on, please be aware of all these factors. These are very relevant factors. It's all about the risk in the end. What kind of return are you trying to get, subject to which kind of risk? Now here, not bad. That many people would put money on this for sure, but always be ethical and say, look, this is a risk, okay? We are trying to do this. In the worst case, this can happen. Now, if that happens, what are our chances of recovery? Okay, what are the probabilities? It's all about probabilities, right? Trading is about probabilities. Nobody knows with 100% certainty whether a specific trade will work out or not. Now with the market causality, as it's known, you can get really, really high win-loss ratios. You can really get, especially if the bias is high, you can actually predict with a high percentage. That alone is mind-blowing because it shouldn't be that way. Now, if everything here would be made up, that would be impossible. You wouldn't be able to have, such a high hit ratio like I do, around 80% on the manual side. It shouldn't be that way. That's ridiculous, I mean, academics are discussing whether, there's a 50.1% predictability and so on. I mean, that alone proves my point. And my work is still there. You can all see it. My live trades, my live calls, my predictions, everything is still there. On the forum, everything. I'm not doing this since yesterday. I'm doing this work since around 2016. Wow, I wasn't aware of this. So we are, moving towards a half a decade mark. All right, at the beginning I was just posting trades now and then with videos, and I did more and more. Now these days I'm even talking about automated trading, different approaches. Okay, so thank you for your time. I hope you liked this video. Please, if you want me to keep on videos like this, then leave me a like. It's okay. I also follow a bit where the demand is. You know what I mean? Keep me motivated. If you're looking at all my stuff for free, no problem. You're welcome. It doesn't cost you anything, to leave me a like or something so that I continue doing those videos where you can learn something. Now, obviously the focus on this channel will be the manual side, but now and then, as you know, I like to do a video on auto trading as well. And as I said before, whether you trade manually or in an automated fashion, you will always learn from the other side. So try to work on both. Even if you're a pure manual discretionary trader, still do testing to understand what doesn't work. If you're an automated trader, still study the market causality to understand how you have to design your strategy that it actually has an edge. Now that in itself is super difficult. It's really, really difficult. The vast majority of strategies will die within a few months. And that's not easy to see once you do proper testing, right? So to get sustainable results, that's really difficult. But if you do that, understand the market causality, it will really give you an edge. If you understand what a position run is, what a short-term stop run is, what happens on higher time frames and lower time frames, fake support, fake resistance, time and range principle, overstretch reversals, etc., all these things, meter levels, of course, which are not public. If you understand those things, you have a much, much, much better chance of designing a trading strategy that has a better chance of survival in the long run because it exploits a true edge. Most of the time, if you think you have an edge in the market, it will completely die off sooner than later. That's why so many people lose over 90%. And the main part of my work in FX trading is to show those games, to show the manipulation principles of the smart money algos. Okay, that was the main part of my work and still is. To explain to you how they manage to make the dumb money lose no matter what they bought or sold, no matter what kind of strategy they follow. Okay, they will make them lose as a collective group because their algorithms use these kind of principles. I kind of reverse engineered that. So I'm able to explain to you in hopefully understandable terms and in an accessible manner what these principles are, how they exploit them, how they make sure that by doing so, the ratios will stay like they are. Most people on the buy side will lose and will lose quickly and will lose a lot, and some of them lose everything. It is a tricky game. Don't fall for it. Okay, don't fall for any cheap, oversimplified sellers on the internet who try to tell you that you need to follow a few signals here and you can quit your job or all this BS. It's complete BS. Okay, and it's unethical. People try to make a quick buck on you, and they don't tell you the reality of the truth, which is that this stuff is complex. If you insist on interacting with those smart money algorithms, with the best programmers in the world, with companies of the highest order, you need to be prepared, you need to do your homework, and it's a hell of a ride, okay? It's not that you sit down at the weekend and you create a strategy and then you're financially free. Forget about that. BS. And then the worst case, all these scammers on YouTube trying to show you, drive a Ferrari, and they never traded in their life. I mean, that's a joke. It's really amusing. Anyways, I'm getting off a tangent here. As you can see, I just love this stuff too much. I hope you enjoyed this video. Always be careful, be skeptical. If you engage in basket trading or grid trading, understand what can happen. Okay, if you want to buy somebody's bot or whatever, really look into it and ask those questions and consider, okay, what will happen in those kind of black swan scenarios? Will everything blow? Don't approach it in a simplified manner. Don't put a simple mind to a complex problem that never ends well. Okay, accept that this stuff is complex and you need to understand it and you need to put in the work. That has been credo number one. Put in the work. Okay, there's no rich overnight scheme. Even if you're a short-term trader, you need to think and work in the long term. That's what's required. Anyway, stay safe, have a fantastic evening, and all the best.